In today's video, I'm going to reveal my top stock pick for July 2025, a lifetime opportunity with strong upside potential. I will also take you through the latest updates in my stock portfolio, show you how I calculated the fair value of this month's stock pick, and if you stick around until the end, I will share 3 more undervalued stocks that are on my radar right now. I'm ATP and let's get started. Firstly, I want to thank XTB for supporting this video. XTB offers 0% commission on both real stocks and ETFs, with a minimum transaction value of just 10 euros. These conditions apply to monthly volumes up to 100,000 euros, and above that, there is just 0.2% commission. If you are new to the platform and want help getting started, check out the full step-by-step tutorial linked in the description below. And here's the best part, if you open an account using the code ATP, I will give you 1 month of free access to our premium investing group, where I share my full portfolio, trade alerts, ETF strategies and much more. You don't even need to deposit any money, just sign up, send us a screenshot and we'll activate your access immediately. Now let's take a quick look at how my portfolio has evolved since last month, and more importantly, the positions I have recently closed. During the final days of June, I closed some profits on several high-performing stocks. To start, I sold 4 of my 5 Disney shares. I had bought them at an average price of $89 and sold them at $118, locking in a solid 33% profit. Then I also closed my position in Quest Diagnostic, which I bought at $130 and sold at $180, giving me a profit close to 38%. Next, I sold my 4 shares of Cisco, bought at $49 and sold at $65, which translates to a 31.6% gain. But the biggest win came from Meta. I had acquired 1 share at $131 during the 2022 lows and sold it right now at $701 for an insane 432% profit. So overall, I had invested around $815 in these positions and I cashed out with approximately $1,615, meaning I made a net profit close to $800. All of these sales were made because the fair value I had calculated for each stock has already been reached, which means the risk-to-reward ratio no longer made sense for my strategy. And of course, all these trades and updates were shared in real time with our premium members, so they could also take advantage of these gains. Right now, even after closing those positions, the portfolio is sitting on nearly 1,500 euros in unrealized profit. That's over $1,700. Now, looking at the broader market, at the time I'm recording this video, the S&P 500 is still trading around the $6,000 mark, approaching its all-time high. Back in May, we predicted this move after the index respected a key support level, and that's exactly what happened. Now, let's move on to this month's stock pick, but before I tell you which it is, if you have any ideas for stocks you would like me to cover in future episodes, feel free to drop them in the comments below. So, the company we are analyzing today is United Health Group, with the ticker UNH. United Health Group is the largest health insurance provider in the United States and one of the most influential companies in the global healthcare industry. Founded in 1977, it operates through 2 main segments: United Healthcare, which offers health benefits to individuals and businesses, and Optum, which provides data-driven healthcare services and technology solutions, playing a crucial role in delivering care to millions of people. As of today, it ranks as the 34th largest company in the world by market cap, reflecting its scale, stability, and long-term leadership in the sector. However, between April and May, UNH dropped nearly 60%, the biggest fall in its history. This happened mainly because the CEO resigned, there were fraud investigations going on, and there was pressure from the US Department of Health. All of this made many investors to sell their shares. But even with this drop, UNH is still one of the strongest companies in the healthcare industry. The good news is that Stephen Hemsley, a trusted former CEO, has returned to lead the company and help bring back trust. Since most of these problems are temporary and linked to leadership changes and investigations, there is hope that shortly UNH will recover and grow again in the next few months. Now let's take a look at the technical setup of United Health Group. When we look at UNH price history on the TradingView daily chart, especially using the 600 smoothed moving average, we can see that this is historically a very stable and consistent stock. Most of the time, the price stays above the 600 SMA line, only dropping below it during rare major events like the 2008 financial crisis. But even then, the recovery was strong and the stock returned to its long-term uptrend. We are now seeing something similar. After this sharp drop caused by leadership changes and investigations, the stock fell around 60%, breaking well below the 600 SMA line. However, since hitting that bottom, the price has already bounced back over 25%, showing early signs of a potential reversal. This type of sharp correction, followed by a solid recovery, often creates a high-quality entry point, especially when the company remains fundamentally strong. So, from a technical perspective, this could be a very attractive time to start building a long-term position in UNH. So, to confirm this setup, let's now dive into the fundamental analysis. I will use 10 different valuation models to calculate the fair value of United Health Group, and I will walk you through the results. We'll start with a set of comparable company models, which evaluate a stock based on how similar companies are priced in the market. Using Finbox, we get 3 different fair value evaluations. The first is based on the price-to-sales multiple, which compares a company's market cap to its revenue, ideal for evaluating companies with consistent sales growth. Here, UNH fair value is around $468, representing a 52.2% upside. The second is the price-to-earnings multiple, probably the most well-known metric, which looks at how much investors are willing to pay per dollar of earnings. This gives us a fair value of $426, indicating a 38.8% upside. Finally, we have the price-to-book multiple, which compares a company's share price to its net assets. In this case, the fair value is $392, which still shows a strong 27.5% upside. These 3 methods already suggest that UNH is clearly trading below what it's worth. Moving on to Simply Wall Street, their premium platform aggregates forecasts from 24 professional analysts and estimates a fair value of $1,191 per share. That means the stock is currently undervalued by over 73%, one of the strongest undervaluation signals I've seen for a blue-chip stock. If we scroll down, we also find that UNH current PE ratio is just 12.9, while the healthcare industry average is a massive 39.5. This tells us that investors are paying far less per dollar of earnings for UNH than they are for similar companies, which could also represent a huge opportunity for value investors. Next, we have MarketBeat, which combines predictions from 25 analysts. Their average 12-month price target is $426, translating to a 38.55% potential upside. Using alpha spread, the base case gives us a fair value of $618, showing the stock is undervalued by 50%. And if we dive into their financials, we can see that UNH has delivered strong and consistent growth for over a decade, with stable margins and outstanding financial discipline, which makes sense for a company of this size and importance. Now let's take a look at value investing, which combines multiple models and analyst opinions. Their estimated fair value is $402 based on input from 32 analysts, which still give us a very healthy 30.89% upside. According to Guru Focus, the stock is worth around $635, again backing up the idea that UNH is massively undervalued. Stock Rover gives us a more conservative fair value of $363, suggesting an 18.16% upside, while Stock Analysis, which aggregates opinions from 35 analysts, estimates a value of $447 per share, showing a 45.40% upside. So, putting all of these numbers together, we calculate the average fair value to be approximately $537 per share. Considering that the current price of UNH at the time I am recording this video is around $307, this gives us a potential upside of 75%, which is outstanding for a large cap, stable and defensive company like UNH. On top of that, UNH also pays a solid dividend yield of 2.86%, which adds an extra layer of passive income to our long-term returns. So, based on both technical and fundamental analysis, this looks like a lifetime opportunity. Let's now head over to Acquisition 5 and add United Health Group to our portfolio. After logging into your Acquisition 5 account, go to the Market Watch section. In the search bar, type UNH, that's the ticker for United Health Group, and be sure to select the stock version, not the CFD. Once you have selected it, click the chart icon to open the real-time chart and review the current price. Now, to place your order, right-click on the chart and select New Order. In the order window, type in the number of shares you want to buy. One of the great advantages of XTB is that it allows you to buy fractional shares, meaning you don't need to commit to a full share if you want to start smaller. In this case, I'm going to buy 0.5 shares of UNH, and if the price drops again in the coming weeks, I will complete the position by buying the other half. Once the quantity is set, click the green buy button, confirm your order, and that's it. You now own part of one of the most stable and powerful companies in the global healthcare sector. Now, before ending the video, here are 3 more undervalued stocks that you should definitely keep an eye on this month. First, we have Elevance Health. Currently trading at around $375 per share, its average fair value across different models is estimated at approximately $616, offering a 64% upside. With strong fundamentals, consistent earnings, and a growing role in US healthcare, ELV is a solid defensive stock for long-term investors. Second, we have Pepsi. Right now, Pepsi is trading around the $130 zone, while its estimated fair value is around $166, giving it a 27% upside. Combined with a healthy dividend yield above 4%, this makes Pepsi a great opportunity for both growth and passive income. And lastly, we have TMO, which was actually the top stock pick for June. If you missed that video, I highly recommend watching it next. TMO still has a potential upside of over 25% and remains deeply undervalued based on our analysis. So there you have it, United Health Group as the top stock for July, plus 3 bonus picks. If you found this video helpful, don't forget to like and subscribe, and let me know in the comments what stocks you are watching this month. I will see you in the next video, and as always, happy investing. Bye bye.